Since last year, Regeneron, REGN, has been bashed up by analysts and investors, citing market erosion fears for its Eylea franchise. The company's excessive dependence on this product has further aggravated worries, and the stock has slipped by almost 40% in the last 1 year. But I strongly believe that most of these concerns are misplaced, and the company and its Eylea franchise will be all safe in 2018 and even for most of 2019. Trading at a forward PE multiple of 15.7x, today this stock seems like an attractive investment opportunity for retail investors. In this article, I plan to explain why I believe Regeneron is a very promising investment for 2018. Eylea continues to be the undisputed leader in the branded anti-VEGF retinal diseases segment in 2018, accounting for 70% share of the U.S. branded anti-VEGF retinal disease therapy market. Eylea has been gradually increasing its dollar market share in 2018. And there is no immediate reason why there would be any hindrance to this growth trajectory in 2018 and most of 2019. The rising rate of aging population has unfolded an ever-increasing market opportunity in the wet AMD segment. In Q1 2018, contrary to expectations that rising U.S. sales of Lucentis will impact Eylea's sales, Eylea managed to increase its market share through higher penetration in existing patients as well as increase in new patients. The drug reported global sales close to $1.6 billion in Q1 2018, of which $984 million were earned from USA, linked above. Further, almost 70% of the U.S. market sales, linked above, of the drug were attributable to demand in wet AMD indication, while DME resulted in 25% of Eylea's quarterly sales and rest 5% were derived from sale of drug in other smaller indications. To further strengthen Eylea's position in wet AMD, Regeneron is aiming to expand the drug's label to include 12-week dosing regimen as well as pre-filled syringe mode of administration in the wet AMD indication. The PDUFA date for sBLA related to 12-week dosing of Eylea is August 11, 2018, linked above. Although today, wet AMD is the main revenue driver for Eylea, there is a huge untapped opportunity for the drug in the diabetic retinal diseases segment. The increasing diabetes prevalence and rising number of patients suffering with diabetic eye diseases implies that Regeneron is scratching just the tip of this iceberg. Already approved for diabetic macular edema, Eylea is gradually penetrating in this underdiagnosed and undertreated patient segment. The drug has already proved its superiority over laser therapy, Avastin, and Lucentis, in clinical settings. Currently the leading anti-VEGF therapy to be used in this indication, the drug is all set to make further inroads in this underserved market opportunity. The next big opportunity for Eylea in diabetic eye disease segment is diabetic retinopathy without DME. Affecting almost 3.5 million people in the USA itself, linked above, the more severe manifestations of this condition, severe non-proliferative diabetic retinopathy or NPDR and proliferative diabetic retinopathy or PDR, can result in vision loss. Hence, these conditions are like the low-hanging fruit, where if approved, Eylea may be rapidly adopted by the physician and patient community. This expectation seems logical, in the context that Eylea has already proved its superiority over laser therapy, the current standard of care for PDR patients, in its Clarity study. The recently published top-line results from the Phase 3 Panorama study make a strong case for Eylea in the moderately severe to severe diabetic retinopathy without DME indication. However, we need longer-term data from the Panorama study to demonstrate the ability of Eylea to prevent vision-threatening complications in these patients. This, coupled with the company's educational efforts, will help in positioning Eylea as an effective prophylactic therapy for doctor patients. Regeneron also expects advances in artificial intelligence to help improve diagnosis rates for these patients, which in turn will further fuel adoption of Eylea. Dupixent is fast emerging as a transformational allergic disease therapy in 2018. Approved for adults suffering with atopic dermatitis, Dupixent faced certain hiccups in terms of sales in Q1 2018. However, these were a result of trade inventory movements as well as patient assistance programs, which generally have higher impact at the beginning of the year. However, metrics such as sequential rise in total prescriptions and new patient starts bears testimony to the underlying demand for Dupixent. In Q1 2018, Dupixent also saw a solid 90% persistence rates for patients getting first refills as well as 83% of patients, linked above, remaining on therapy in the first year of launch. Going beyond adult atopic dermatitis, Dupixent may also be able to target the unmet demand in adolescent and pediatric atopic dermatitis indications, an area with significant unmet demand. Dupixent has already demonstrated efficacy in the adolescent AD indication in Phase 3 trial. Regeneron and Sanofi SNY will submit application for expanding Dupixent's label in the adolescent atopic dermatitis indication in Q3 2018, linked above. Besides, the companies are also exploring the potential of this drug in AD patients in age groups of 6 to 11 years and 6 months to 5 years in 2 separate studies. Dupixent, however, holds a lot of potential for tackling with multiple type 2 immune conditions. As such, we have Regeneron and Sanofi waiting for decisions in the USA, Europe, and Japan, for approving Dupixent as add-on maintenance therapy for moderate to severe asthma. Results from Phase 3 trials, Quest and Venture, make an especially strong case for this label expansion of Dupixent. While the PDUFA date for expanding Dupixent's label in adult and adolescent asthma indication in the USA is October 30, 2018, linked above, the companies are also working to expand the drug's label in pediatric asthma indication. Dupixent is like an entire type 2 immune condition pipeline packed in a single product. After positive data from Phase 2 proof-of-concept study, Regeneron and Sanofi anticipate readout from Phase 3 trial of the drug in nasal polyps indication in late 2018. The companies have also planned to initiate pivotal studies in COPD indication, Phase 3 program for eosinophilic esophagitis, and Phase 2 program for peanut and grass allergies by end of 2018. What makes Dupixent special is its capacity to selectively target only the allergic disease as part of the patient's immune system. Unlike other immunosuppressants in the market, Dupixent does not result in other infections in the patient. Further, Dupixent may reduce dependence of asthma patients on steroids, which are accompanied with their own long list of complications. REGN 3500 and cemiplimab may prove to be promising growth avenues for Regeneron. With PD-1 inhibitor, cemiplimab, awaiting approval in advanced cutaneous squamous cell carcinoma segment, Regeneron and Sanofi stand very close to the first commercial launch from its broad immune oncology program. Advanced CSCC results in annual death toll in the range of 4,000 to 8,000 in USA, linked above, a patient segment that can be helped by cemiplimab. And based on high response rates seen in the Phase 2 trial in advanced CSCC indication, there has been an increase in confidence for cemiplimab in solid tumor setting. Regeneron and Sanofi thus plan to evaluate the potential of cemiplimab in NSCLC indication in future years. REGN 3500 is also being studied for a variety of respiratory diseases, either alone or in combination with Dupixent. All these are early-stage research programs with immense potential for Regeneron. Certain company-specific risks cannot be ignored by retail investors. Despite having an underserved target population as well as proven efficacy and safety, the commercial launch of Proluent was nothing short of a debacle. Embroiled in patent litigations with Amgen, Nasdaq, AMGN, and in negotiations with reluctant payers due to the drug's high price, this transformational PCSK9 inhibitor drug found it difficult to get in the hands of eligible patients. In this backdrop, on May 1, 2018, Regeneron and Sanofi decided to drop the net price of the drug in exchange for simplified access from Express Scripts. with Express Scripts selecting Praluent as the PCSK9 inhibitor on its national formulary effective July 1, 2018, the drug may now manage to rapidly increase its sales volumes. Regeneron and Sanofi are also engaging with other payers, and expect the subsequent growth in volumes to offset the price drop. However, remains to be seen, as well as whether the price drop actually proves beneficial for Praluent in the long run. Praluent also expects to see improvement in adoption, due to positive data published from the Odyssey outcome study. This large trial, comprised of over 18,000 high-risk patients having witnessed acute coronary syndrome in the past year, demonstrated the drug's potential to reduce cardiovascular events as well as risk of overall death over a period of 2 to 5 years. The clinical benefit was even more pronounced in patients with LDL-C levels greater than equals 100 mg per deciliter. Regeneron and Sanofi now plan to apply for label expansion of Praluent based on this study, in mid-2018. Then we have Kevzara witnessing much lower adoption, due to intense competition in the rheumatoid arthritis space. However, Regeneron and Sanofi are confident that aggressive pricing and strong data package will help boost the uptake of this drug. After a FDA clinical hold due to probable safety event, fasinumab's benefit-risk profile has again been called to question. Based on recommendations of an independent monitoring committee, the higher-dose regimes of fasinumab were discontinued from Phase 3 trials evaluating this anti-NGF antibody in osteoarthritis of the knee or hip and chronic back pain indications. This news has aggravated investor concerns for the safety of the drug. However, I strongly believe that Regeneron is a robust investment opportunity for retail investors in 2018. Closing at $329.10 on June 21, 2018, and having 12-month consensus price target of $374.46. Linked above, Regeneron is a promising investment opportunity for retail investors. Although these are some major risks for this stock, the company definitely has strong upside potential due to the company's robust fundamentals. Hence, I recommend retail investors with average risk appetite to purchase this stock in 2018. Disclosure: we have no positions in any stocks mentioned, and no plans to initiate any positions within the next 72 hours. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from Seeking Alpha. I have no business relationship with any company whose stock is mentioned in this article.